interest rates predicted to reach 5% this year. At one point, it looked as though they were going to drop. But if they hit 5%, it will mean, I'm told, 1.4 million households on variable mortgages could face paying, are you sitting comfortably, £6,700 more per year than they did in December 2021. Let's not scare you. Let's get some good, solid advice on this from the whole money man, Malcolm Davidson. Joins us in the studio. Nice to see you, Malcolm. How are you?
Very well, thank you. Good morning.
Morning. Is it panic tin hat time on the mortgage front? What's going on?
I think the panic and tin hat time was the autumn with the Truss and Kwarteng mini budget, and that was panic and pandemonium and a bit of a frenzy because the banks didn't know what was going to happen at that point, so they ran for the hills. Okay, so mortgages were still available, but a rate that was 4% perhaps in September was hiked up to 6.5. So if your deal was expiring at the end of last year, certainly it would have been squeaky bum time for a lot of people, especially those in the south of England who tend to have bigger mortgages. And that is one where I think we're in the north a little bit insulated, aren't we? We don't benefit from those enormous property price spikes that other parts of the country get. But then again, when things like this happen, we're not quite as acutely affected, although, of course, we can't dress this up as good news. So that's behind us. The city seems to have reacted quite well to this new Sunak and Hunt partnership. And as such, the banks came back to market in January with rates kind of in the fives. And since then, we've seen the fixed rate mortgages falling. In fact, only this week we saw the first fixed rate, 5-year fixed rate, 3.82. That's the lowest rate we've seen. That's the second or third deal we've seen underneath 4%. So it's quite a curious time, isn't it? Because we've got the Bank of England raising interest rates. You're right to say that we expected that it already peaked, but this inflation doesn't seem to be going anywhere fast, but a curious situation where the base rate is going up, but fixed rate mortgages are actually becoming slightly cheaper.
Right. So would you snap the hand off for a fixed rate now?
No. So
right. Interesting.
So the action that you have to take if you've got a mortgage that's coming to its end this year is start looking into things 6 months before your deal expires. But that's not to say that you take a deal at that particular point. Okay, you should assess what your current lender is offering you with all the other deals on the market, and potentially with some of the product switches you can fix in and cancel it at a later date. That is possible, but it's a bit of a confusing time for people, and it's a bit of an individual one here. It depends on your future plans. Do you plan to move house, extend your property, etc., etc.? And that's something that we're not seeing at the moment. People looking to borrow extra money because you're borrowing it at sort of 4% rather than a couple of years ago when you would have had 2%, and those deals have probably gone forever.
Right. You don't think they'll come back low mortgage rates?
No, I mean, that was off the back of the credit crunch stuff, wasn't it, 2008? And we just became accustomed to these really, really low interest rates. And it just went on for such a long period of time. But that looks like it's come to an end. We're not going to get back down to the 1% and 2%.
Is that a good, or it's not good for the consumer, but is that a good or bad thing for the economy?
I would say this is just a more of a normal situation. It was really the last decade that wasn't normal. And with the rates that we're seeing now, 4%, 5%, and we've just seen, as I said, fixed rates dropping under 4%, back to what we were seeing sort of for a long, long time previously. So it's, in terms of what's good for the economy, I'm not sure that, there are certain sectors of the economy that look like they've got some real problems.
If you're saying people get organised 6 months in advance. For those that are maybe not that organised, that are been on a fixed and now going on a variable because they were waiting to see what was going to happen, what's the advice there?
Well, you need to act a bit quicker. But with a product switch within your lender, you can do it at the 11th hour. But that doesn't give you enough time then to look at the other deals that are in the market. So it's not too late if you're in the last few weeks, but it probably is too late to swap lenders because the process of swapping lenders takes a couple of months, and therefore your mortgage would drift accidentally onto a standard rate of interest, and we're seeing some of those rates at 8%. So taking no action at all is probably the worst mistake that any customer can make that's got a mortgage coming for renewal this year.
And what are your customers saying to you? Are people being scared by mortgages? Are they not buying houses? What paint us a picture of what's going on, Malcolm?
Yeah, okay. So I think the panic seems to be behind us now. So people whose deals are expiring this year seem to have become accustomed to the fact that they're going to have a higher mortgage payment. So we're not seeing the panic and mayhem that we saw at the back end of last year. So that seems to have been abated, although it's not good news. We're not seeing mortgage payments necessarily go up by £500 or £600 a month, but £200 or £300 a month is a bit more normal. Up north. In terms of your first-time buyers and home movers, well, people won't wait forever, and that's probably the comment that we've heard more than anything in 2023. People that put off their plans at the end of 2022. What's the alternative? You can't live at home necessarily forever. If you're extending your family, you need more space, you've got to move. And staying in rented accommodation it's not like rent's getting any cheaper either. Everything is going up around us, not just the bills, not just the mortgages, but rents as well. And I just think it's another great example of what's happened in the last 6 months of nothing will really deter people from trying to get onto the property ladder in the UK. If they can afford it, they'll continue to do it. And our experience at the moment is people are continuing to do it.
Figures I had were saying some people could face £6,700 extra a year. From what you're saying, it could, in this area, could be about £3,000 a year extra. Yeah, which is a big chunk.
Oh yeah, it's a lot of money. But I think obviously we've just got to be aware when we're up here and we see the kind of the mainstream news that comes through, a lot of it from the south. It can be a little bit on the sensationalist side, and it is sort of veered a little bit towards the south of England sometimes. So I'm not painting this as good news at all. Your mortgage payment will be going up, but we're not seeing those dramatic rises that you mentioned in that article there.
Is it worth taking long-term fixes at this stage?
So that's the other curious thing that's happening. So in the 25 years that I've been doing this, normally the longer you want to fix your interest rate for, the higher the rate becomes. So in other words, the 2 years are cheaper than the threes are cheaper than the fives, etc., etc. For the first time ever, we're seeing the 5-year fixed rates price lower than the 2-year fixed rates. So that's the dead interesting one as well. So that could be a difference of 0.5%. Now, I think something is afoot here. It's like, do the banks want you to fix in for that little bit longer because they know potentially that interest rates are coming down at a later date? Who knows? But if you are very nervous that your mortgage payments are going to become unaffordable if interest rates went the other way and went back up, because we've got a change in government potentially next year, we've got an election at least next year, then there is some value in those 5-year fixed rates at the moment. But it's not for everyone because a lot of the forecasters are saying, although a lot of these predictions do turn out to be wrong, that interest rates do start to come down when inflation finally comes back down towards his 3% target.
But you can't necessarily trust the information, because they were expecting inflation to come down, weren't they? The Bank of England say we're going to get interest rates down, inflation's going to come down, and then you look at food inflation, it was 19% they were saying. There's still the Ukraine-Russia situation. With still the fallout from Brexit, and there's all that uncertainty going on. And
with experience and age maturity, you come to realise this, that a lot of these headlines are on forecasts, and no one really goes back 6 months and looks what the forecasts were, and they're wrong all of the time. So all we can do in terms of mortgage advisors is look at people's individual situation, see how important it is for them to fix in for 2 years, 3 years, 5 years based on their future situation, and make those recommendations accordingly based on everyone's individual case.
Yeah, because with the longer mortgage, you get certainty, don't you?
That's right, but you might...
In an uncertain world.
True, but you may well end up with buyer's remorse if in 2 years' time inflation has come down and mortgage rates are cheap. You might be kicking yourself because you have locked in for that 5-year period. So it's all crystal ball stuff, this.
Yeah, but that's a gamble, isn't it? You've got certainty, well, in theory, if you keep your job and everything like that, you can, for the next 5 years, you can manage that mortgage.
Agreed.
Are the big penalty clauses in
exactly.
The mortgages?
So it might be costing you £2,000, £7,000, £10,000 to come out of that deal. So there's risk in both examples. So we can't just say do a 5-year fixed rate at any price. We're not going to fix your rate at 30% APR, are we? Do you know? So it's not just a 5-year fixed rate for everyone. So and the banks are quite smart about this, of course, because they price their products accordingly, almost like to create this doubt. And remember, their crystal balls aren't that much better than the rest of us. So you've got to look at everyone's individual situation and see whether fixing in for the short term or longer term is the right thing for them.
What's your gut feeling about where it's going to go?
Well, you don't listen to the experts. I'm one of them. I don't know. So perhaps...
Well, that's good. We appreciate your honesty. I think that because it is crystal ball time.
But the logic suggests that everyone is telling us that inflation will come down. If inflation comes down, then interest rates will come down and there may be cheaper deals ahead. But there is an election next year, and what hits us every few years, all these left field events that we've seen for these last few years, from Brexit to COVID to cost of living crisis to an election next year, who knows what's going to happen next? I wish I could tell you.
No, I appreciate the honesty. Malcolm, where can people find you?
Hullmoneyman.com is the website, and what I would urge people to do, and it's not a plug for us, but don't just take the first deal that your bank offers you. Have a look at it and contact a broker, see what else is out there, but look to do it 6 months ahead of time.
Do bank and building societies haggle, or are that's their rates, or can you negotiate a better deal?
No, they won't negotiate with you, but what we see now and again is your current lender may have exclusive deals that they make available via brokers.
Right, so it's worth checking.
It's worth having a look.
Malcolm, thank you. In an uncertain world, you've said it's an uncertain. Yeah, no, but I actually appreciate that, because that's why you're in, because that's, you can't say it's definitely going to happen because nobody can. No. Have you known anything like it, the uncertainty like this?
I suppose I have. I mean, I suppose 2008, wasn't it? No one knew. No one knew what was going to be happening next. What I haven't seen before is we're just squeezed from all angles, aren't we, at the moment? And it is tough for people out there.
Malcolm, nice to see you. Malcolm Davidson, the Hull Money Man. Do check him out. As he says, go to a mortgage broker if you're looking for a new mortgage. Love to hear from you all.